Yes, yes.
Thank you. Good afternoon. This is Mohammad Abdul Latif. I am working as Senior Assistant Chief and Assistant Project Director, support to the implementation of Bangladesh Delta Plan under the General Economics Division, Bangladesh Planning Commission. And the content of my this presentation is the title of my research is the relative performance of real estate investment trust versus real estate funds, focusing on the Korean case. I started this research under the professor of KDI School of Public Policy and Management. Professor Mancho was my supervisor at that time in 2018. And the content of my research, content of my presentation is that the objective, motivation of the research, literature review, hypothesis, findings, research contribution to financial consumers, limitation of the research, and the conclusion. The objective of my research is to empirically investigate or explore the determinants or factors of the returns to holding a real estate investment trust and real estate investment fund, that is called RIF and REIT, by using farm level panel data covering 129 REIT and RIF from Korea since 2001 to 2018. So the period of my study is 2001 to 2018. A panel data I have taken there. So motivation of my research was there is a few empirical research on indirect investment in a real estate market other than USA. In the globally, US is the leader, and there are more of the research is done by the researcher in USA, because there are lots of data listed, stock exchange listed REIT and RIF there. But outside the USA, there are a lack of authenticate data. And the research more focus on, the previous research more focus on stock exchange listed REIT and traded REIT, that is stock exchange traded REIT, and they are externally audited non-listed REIT and RIF, but which REIT and RIF are not listed in the stock exchange, and there are small, this study is not done in other areas. And regarding Korea, actually Korea is a unique real estate market. Real estate strength is very high in Korea, where there is presence of listed REIT, non-listed REIT, and listed REIT and non-listed RIF. So there are 4 items are here in Korea. So it was a good sign to do research in the 4 segments. And there was also an authenticate data source, that is TS 2000. The data was externally audited companies where I have taken the data. So it is also instigated me to do this study. And the previous study was more on short time based, like 5 years or 6 years to 7 years. And in this case, I had got 18 years panel data. And it also captured global recession period, 2008, 2009. So in that sense that these things motivate me to do this research in this REIT and RIF comparison study. And another one that now Asia is more focusing on these areas, indirect real estate finance. In global share in 2018, it was 27%, and 2021 in forecasting is that the global share will be 39%, and 2030 it will be 50%. So this is a huge market in Asia, and there is possibility of cross-border investment, like Singapore is investment in China, India investing in other countries, Singapore investing in Malaysia as well. So there is a cross-border investment. And regarding real estate wealth, Korea is a huge real estate wealth. Like it is in the case of USA, it is 35%, but regarding real estate wealth in Korea, it is 86.44%. So it is a huge, but market capitalization is very less in Korea compared to USA. In USA, it is 5.75%, and in Korea only 0.2%. And if we see, Korea is the forerunner in the real estate law. They enacted law in 2001, but there are and their counterpart like Japan and Singapore, there are same time they initiated this act, but Japan, Singapore, Hong Kong, they are going very fast compared to Korea. In number of listed REIT, according to data Bloomberg, it is only 7 compared to its counterpart Japan was 34. And REIT market capitalization in US million is only 195, where in Japan is 38,239. And if we compare with Malaysia and Thailand, it is also Korea is far behind than Malaysia and Thailand as well. And regarding Korean REIT and REIF, it is its total asset is regarding REIT, it is 28 billion US dollar, and regarding REIF, it 86 billion. So it is very less compared to its counterpart Japan, Singapore, and Hong Kong, as well as in other Asian countries like Malaysia and Thailand. So now we go, what is REIT? REIT is the REIT, or a real estate investment trust, is channels in investable funds into operating, owning, or financing income producing real properties that conceptualized to enable small and marginal investors to participate in large commercial real estate through buying in a portfolio of assets. And it is started in 1961 from the USA. Now its owner are 80 million in America, and it's divided in 60 billion. And according to NAREIT, its market capitalization is 1 trillion, and 196 REITs traded in New York Stock Exchange. So it is a huge market in USA. And its initiation, after its initiation in 1960s, the lodging and resorts, apartments, warehouse, distributional facilities, central business districts, office building, bank branches, movie theaters, factory outlets, gasoline stations, farmland and casinos, all are now REIT business. So now business is going on in that area, and global market capitalization is 1.7 trillion, and global country operation is 37 now, and it increased within last 10 years. It is like double, and within 4 years, last 4 years, new entrant are 7. And its mature market is USA and Netherlands. It initiated in 1960s, and then Australia 1970s, and in 1990s there are Canada, Ghana, Belgium. In 2000 now some Asian countries like Japan, South Korea, it initiated in 2000 and 2001, then Singapore 2002. And now in other Asian countries like Pakistan, it initiated Act in 2013, and under consideration is China and India. So new entrant are in Asian countries, Pakistan and China and India. And you know, my country is Bangladesh, and we are going through 8-5-year plan, and I'm working as the Ministry of Planning. So I try to, in the policy level, I try to instigate to take first in Asset-Backed Securitization Act. Without this act, the REIT and REIT secondary market will operationalize. So first, securitization of asset is needed due to real estate is a illiquid asset. So to transform from illiquid asset to liquid asset is needed securitization. In country Bangladesh, as a developing country, there is no securitization act. So asset-backed securitization is needed here. And regarding the main salient features of REIT, there is ownership, liquidity, diversification, transparency, and dividend. 90% of its profit is going for the dividend. So it have to declare its 90% of its profit as a dividend to its shareholder. Regarding RIF is a special type of mutual fund characterized by indirect real estate investment vehicles that primarily focusing on investing in securities offered by public real estate companies. So real estate fund is a mutual fund type. So here I am showing the structure of REIT. In REIT structure, there are the investor invest, and there are the sponsor, there are the asset management company, asset custody company, and investment consulting company. Through this, REIT is structured, and for it invested to the investor, and they provide the dividend, and sponsor take the shares.
Oh, I'm sorry, Dr. Latif. I'm sorry. So because we run short of time, so please be brief. I'm sorry. Okay.
How many minutes, Professor, left?
So I think so we have as a maximum, so another 5 minutes.
Another 5 minutes only?
Yes, yes.
Oh, sorry.
It will be okay?
7 minutes is okay, Professor. 7 minutes. Okay. Can you give me 7 minutes? Okay.
So after your presentation, so we have to discuss. So
okay.
Okay. I'm sorry.
So regarding literature review, so first, how to measure funds performance measurement. Funds performance measure can be done through capital asset pricing model, data envelopment analysis, DAE, and there are some researchers he studied in that way. And regarding determinants of REIT and RIF performance through scale of economy, the size of the REIT and RIF, and capital structure is also studied by some researchers, and the leverage, financial leverage, capital structures, and geographical locations. And there are researchers in the Korean financial market. And there are some research gap, and my contribution of this research, academic research failed to keep up some same speed with the development of non-listed REIT and non-listed RIF in financial markets. So there are some gaps. Most focus is a performance comparison between stock exchange REIT with non-listed REIT or listed RIF with non-listed RIF. And in my research, the hypothesis was in a ceteris paribus condition, real estate investment trust should better perform over real estate fund, and stock exchange listing should be decisive factor of REIT and RIF performance in return earning. And third one is economic scale of the REIT and RIF may be influential factor for return earnings. My fourth and fifth hypothesis was capital structure also a determinant of REIT and RIF performance, and leverage as well is another determinant performance of REIT and RIF earning. And data source are here, TS 2000, and it is a panel data. I went through several authenticate sources here I mentioned, and variables are here. Dependent variables are income before tax asset ratio in a year, return on assets, and total my listed and non-listed REITs are 129, and these are my independent variables: capital structure, financial leverage, corporate structuring. And I went through a summary of statistics, and I went through correlation. I saw the graphical presentation of through the histogram analysis, and this is my estimation strategy. And in this result, I found that I am just going through, this is my results and discussion sections, as I have very few times, only 2 minutes left. So I just show my summary of the findings. In summary, the company status as REIT or REIF is not a statistically significant factor for return on assets. It proves my hypothesis 1. And second hypothesis was, to prove the second hypothesis, there is no statistically significant difference between stock exchange listed REIT and REIF versus non-listed REIT and REIF in return earnings. And regarding the impact of lag value on REIT, that previous year's return on assets, it is 1% increase in the first order lag value of return on assets. It enhances return earning 0.05 to 0.07% in current year return on asset. And regarding hypothesis 3, in the case of economic scale, size of the company shows a statistically highly significant positive association with return on asset. It is stated that 1% positive change of asset increase 0.014 to 0.019% in the income before tax asset ratio. And this finding is consistent with existing REIT literature. It also infers consumers are confident to invest large and well-known REIT funds. And it also stated that assets show diminishing marginal return. Increased return with decreasing trend in return earnings may reduce consumers' demand for investing in large REIT company become less with increasing its size, which is compatible with the conventional microeconomic theory. And the fourth or the final one is, it is examine the variable liability assets, that is the capital structures. It is also demonstrate negative relationship with the return earnings. It is stated that 1% increase in the liability asset ratio decrease 0.314 to 0.53% in ROA. Finally, it is shown that ceteris paribus highly levered firms are inflicted with a larger negative shock inflicted by that recent global financial crisis. And I check the robustness through the following way: draft of the stock exchange listing variable, including data from listed REIT and REIF companies, restricted diversification based on the liability asset ratio, and aftershocks of global financial crisis in 2008. And the financial policy implication of the research: through this research finding, we can better manage and improve the overall functioning state for the delivering services to financial consumers. We can reform REIT and REIF rules and regulation. Some researchers said there is through these findings, it can say it is a strict rule in Korea. So rules and regulation can be changed. And in SDG, there is leaving no one behind. There are more aging population in Korea, and to include this aging population, so we can adopt this REIT. And there are senior citizens, real property inclusion in REIT, and there are invest pension fund. So if we invest pension fund and REIF, there will be more investment and more fund in this REIT or REIF. So South Korea's pension fund, how it grow, then there is projected. And in the conclusion, this empirical research underscored that the company status as REIF or REIF and stock exchange listing or non-listing are not the decisive factor for return earnings in Korean real estate financial market. Again, the finding of the size of the economy shows the economics scale effect as well as sign of consumer confidence toward large and well-known firms, and the result of lag value of return earnings illustrate momentum effect. Thank you all to attend this presentation. Thank you for giving me a chance to present my research in this program. Thank you, Professor.